Are you ready to make AASB S2 work for you, not against you? In this learning capsule, we will break down practical steps for implementing the standard, from building the right team and mapping your data to crafting clear disclosures and avoiding common mistakes. Get ready for real world tips, simple tools, and strategy that will boost your confidence and set you up for compliance success.
As we move from understanding ASBS to putting it to action, the first step is simple but critical. Build the right foundation. Start with step one. Understand the requirement. Before jumping into data collection or targets, take the time to read ASBS2 in full, along with its supporting guidance from ASB and the International Sustainability Standard Board. Understand the four core pillars: governance, strategy, risk management, and matrix. Knowing what's expected will help you avoid rework later. Step two, map your key stakeholders. You can't implement climate reporting in a silo. Bring together voices from finance, sustainability, legal, risk, IT, and operations. Each team has a piece of puzzle, from emissions data to financial disclosures to scenario analysis. And each of these puzzles are important. Pieces of puzzles are really important. So make sure you get all the stakeholders together. Then move to step three. Identify your material climate risk. This is where scenario analysis or sample climate risk heat map can help. What's most relevant to your business? Is it flood disrupting your supply chain or transition risk from carbon taxes? Start there. And finally, step four, integrate climate into governance. Make sure your climate is on the board's agenda. It should be embedded in your executive KPIs, internal audit programs, and decision-making frameworks. This step turns climate risk from a compliance task into a business priority because without strong foundation, clear roles, material risk, and top-down support, it's hard to build a reporting process that actually drives value. Now, once you have laid the foundation for ASBS2, the next step is to start embedding climate in your core system and processes. This is where data and strategy come together. Let's begin with step five, collect emissions data. You don't need a perfect emission model to start. Begin with what you already have in your hand, like fuel and electricity bills, company travel data, supplier spend reports. That gives you basically scope one and scope two. Then start building visibility into scope three, focusing on your largest and most material suppliers and logistic partners. Over time, your estimates will improve, but don't let perfection delay progress. Step six would be tracking metrics and set targets. This is when you move from measurement to accountability. Set realistic emission reduction targets. Use carbon intensity metrics like measure emissions per unit of revenue or product or per product sold to track efficiencies. And make sure you compare your results year on year. That trend is what investors, auditors, and regulators care about. Step seven, perform scenario analysis. As we saw in the previous slide, it helps you, it's not just a report, it helps you to stress test your how strong your company is. Model your strategies under both a 1.5-degree and a 2.5-degree climate future. What happens to your cost, to your assets, or to your customers in each scenario? Once you have answers, link those insights to capital planning. Should you invest in more resilient infrastructure? Is now the right time to shift sourcing or accelerate product innovation? Together, these steps will move your business from tracking emissions in a spreadsheet to integrating climate risk into real decision making. And that's the difference between a climate report and a climate strategy.
Now that you have built your climate reporting foundation and embedded key processes, it's time to turn your work into action and value. Let's start with step 8, disclose transparently. This is where you present climate disclosures in line with AASB S2's 4 pillars: governance, strategy, risk management, and matrix. But just don't tick the boxes. Be upfront about your assumptions, limitations, and area where the data is still being developed. Transparency earns trust and shows your stakeholder that you are serious about climate risk. Step 9, engage with your auditors and investors. This isn't just a reporting task, it's a credibility task. Support your disclosures with audit trail, documented controls, and evidence of board level oversight. Make it easy for your stakeholders to follow the logic between your numbers, your risk process, and your business strategy. Because what builds confidence isn't glossy graphics, it's clear, verifiable information. And finally, step 10, the final step: review, learn, and improve. No one gets everything right the first time. And with ASB S2, it isn't designed as a one time project. Treat your climate disclosure like how you treat your financial close process. Review them regularly, whether it's monthly, quarterly, annually. Refine your estimates and keep on expanding your scope 3 coverage. And over the period of time, improve your scenario analysis. Set a maturity roadmap and aim to get better every year. Because the goal isn't just compliance, it's leadership. And when you disclose honestly, engage meaningfully, and keep improving, your climate reporting becomes a strategic asset and not just a reporting obligation. Pick one process in your company, like financial reporting, risk assessment, or supply chain management. List down 2 practical steps you could take to align it with ASB S2 requirements. Then identify one potential obstacle and how you had overcome it. Real learning happens when you apply concepts. Take this as a challenge and start driving change today.